take a look at the bigger picture now. I'm very pleased to say Mish is here, Chief Strategist at MarketGauge.com. It's been a long time. Mish, so nice to speak to you on this side of the planet. And let's just talk about the takeaways from what you're seeing as far as the market action is concerned. I mean, it was quite poetic that we started things off on a weaker note to start what is traditionally a bit of a tougher month for equities, but also bonds as well. What's your steer on the markets right now, Mish?
Well, first off, great to see you, Sam. So happy to see you on this side of the pond, as they say. Well, you know, it's so interesting because this whole month of August and now into September, we have really measured the market by its weakest link, and when does that weak link become more of an anchor? And we keep seeing the same weak link over and over, and that's two major sectors. One would be transportation, which has definitely not participated in the way, say, the small caps have done lately, and the other would be semiconductors, which of course is the big surprise, as semiconductors have been really the reason for the market rally for the last couple of years. However, neither one of those sectors are critical yet, and that's why we keep seeing rotating buying. And of course the news on Google yesterday, Alphabet, was another big reason why we're seeing NASDAQ up. So I think you have to kind of tread lightly right here and wait to see what happens with these two key areas. You know, small caps are rotation, but they were still got to only about 3% from its all-time high. And of course, retail, which has done better than most people expect, is still so far off from its high, which was made in 2021. So there are concerns, but there's certainly nothing screaming bearish just yet.
Okay, so the market is starting to respond with some rotation. No doubt there are some conversations out there about how this time is different, particularly for the case when you look at small caps, especially because we've got some of these rate cutting expectations coming, and also, as you say, the AI story. Which sectors are you looking at which are emerging perhaps as the sort of big winners here?
Well, I wouldn't exactly call this emerging, but you know, I've been a big gold and silver bull for quite some time, and that has done extraordinarily well. And looking outside in terms of non-traditional assets, I think Bitcoin might have actually seen its bottom at around 107. Still has more to prove. So I like looking outside of the traditional, but I've also been looking into energy. If the whole market drops, obviously energy might be impacted, but there are certain areas that have been holding up, like solar energy, interestingly enough, and also obviously uranium. And now we're looking at natural gas at a potential bottom. Kind of would avoid oil because it's been a big political football. So that's kind of where I'm going right now. And then outside of that, believe it or not, Rivian, which has been really strong over the last few days, looks like it's having a major breakout. And then, of course, we go to my Vanity Trade from there, and that would really be more tied to the diet drugs.
Yeah. Okay. So there's a lot to unpack there. Let's start from the top and what we're seeing in gold, because we're continuing to see another record today. What do you make of what we're seeing as far as, you know, appetite and demand for safe haven trades, particularly because of what we're seeing very much on the long end of the yield curve?
Well, yeah, I mean, gold, interestingly enough, there's more gold reserves now than Treasury reserves for the first time in 30 years. So that kind of tells you the central bank buying has been relentless. I think what happened with gold is a lot of people started to get negative on it because it couldn't break over that 3,500 level. But nonetheless, it was in this giant consolidation. So what's happened now is like a true commodity. When we get to a point where the sellers do not come out in strength, but the buyers come out and buy more in strength, that really sets you up for a parabolic move. And a lot of speculators that have been on sidelines might be coming back in. But certainly now, looking at this price, it looks like 3,800 to 4,000 is certainly not unreasonable. And yeah, this is reflecting the cracks that we're seeing with the potential in the bond market, yields rising while the Fed's supposedly lowering, the potential that the Fed may not be as autonomous as it was, what's going to happen with tariffs, and now the whole legality of that situation. I mean, there's a lot. The debt, of course, continues to rise. This is what's spooking the market to a degree, and gold is our mirror for that.
Okay, let's talk about your Vanity Trade because, it's been an interesting time for some of these companies, as far as the dynamics that you were talking about with regards to some of the obesity drugs, some of the beauty names as well. I mean, one name that comes to mind is Ulta. I mean, we were sort of trying to get to the bottom of why we saw such a strong performance as far as those earnings were concerned, whether this is a consumer trend of people being mandated to come back into the office. So could you sort of encapsulate, what we're seeing there and, this overarching dynamic, with regards to some of the pharmaceuticals and also your Elfs and your Ultas of the world? Because, I mean, Elf was a different story. I mean, they're also dealing with, sort of the demographic trends, but also with regards to their market exposure overseas, tariffs, etc. But how are you looking at all of these names?
Well, thank you, Sam. You just gave me a third reason why to be very bullish in Ulta, going back to the office. Well, we have two kinds of things. First of all, makeup is still relatively inexpensive, which is why very often it's recession-proof. Not saying we're going into recession. I'm just saying that when people are starting to be more careful how they spend, especially women, they will buy makeup. That's number one. Number two, of course, is the diet drugs. And if you watch any television, regular television, or even Hulu, because we've been watching some stuff there, every other commercial is some form of a diet drug, Zepbound or Mounjaro or, just Wegovy. And what's so interesting is like looking at Eli Lilly, which is still relatively undervalued. They're actually advertising for people to come work there. So what we're really seeing now is these drug companies are gearing up for not only producing more of these diet drugs, but I think the eventuality of making them cheaper. And then you have to look at that domino effect. So what happens to this tremendous number of people who have struggled their whole life and now don't have to? They buy more makeup. They buy skin supplements. We saw a company like Nu Skin, which was dead, go from 8 to 12. We're looking at companies even like Stitch Fix, because you can buy clothes at home. They send it to you, which could be very comfortable for some people. Ulta, obviously, we just talked about. Elf Beauty, even though it had a tariff impact, came soaring back. And looking out at dating apps. So I think what you have to really look at right now is these become more mainstream? And by the way, I just saw Serena Williams do a whole ad for it too, and celebrity focused and more affordable. How much of that's going to be impacted in terms of the GDP? And there's been predictions that it could be up to 6% of an impact on that. So you're talking about a mega trend that should not be ignored.
Yeah, it's fascinating the sort of impact that these weight loss drugs are having on the broader market as far as trading themes are concerned. Because then, we were also talking earlier today about Constellation Brands, those in the business of beer and wine. I mean, people are choosing to be more healthy and, that's having knock-on effects for those that are in the business of energy drinks, etc. So, it's a really interesting point you make. I do want to pick up, though, Mish, on what you mentioned about, some of the renewable energy plays, particularly in light of the political headline risk. How should one be approaching that?
Well, I love expression, so I've been saying all energy hands on deck, because really that's what we need to be able to keep up with the electricity demands of AI and data centers. And of course, China's also been experiencing a big demand, and they've been really at the head of the realm in terms of solar energy. So it's not just U.S. centric. But if you look at some of the solar stocks, we actually really like Jinko Solar because it is a Chinese company. But even First Solar, these stocks look like they're trying to bottom, not look like they're about to sell off. They've already bottomed. And then, of course, beyond that, what do we have the most of here in the U.S. that can really work in terms of energy would be natural gas. That's why I keep focusing on natural gas even more than oil. And these producers do not want to frack when things get too cheap like they just did. So we're seeing natural gas back over $3. I think that could be a significant breakout. We'll have a look and see. But maybe I wouldn't touch wind energy as much, but I certainly do like that. And of course, uranium, which if you look at just the ETF URA, it's back over $40. That's a good pivotal spot. That looks like it has quite the future as well, even if we're not quite at nuclear just yet.
Yes, but it certainly is getting a look in, isn't it? Thanks to some of the folks over in Silicon Valley. It's interesting how they can sort of change the perception sometimes. Mish, we have to leave it there. It's been such a great chat as always. Really appreciate your analysis and insights today. Mish Schneider, Chief Strategist at MarketGauge.com.